it's Sharonda here with Riddick Events. And once again, we are here hosting the Red Couch Conversation. I know you missing that red couch, but because we're mobile, we're going to be very versatile. So don't focus on the red couch, focus on the message, okay? So I'm here with Warren County's own Mr. Damian Malum. How are you?
Hey, doing great, doing great.
Thanks for being my guest
Yeah,
tonight.
thanks for inviting me.
Yes, thank you. So just wanted to do a little plug in here. It's tax season. And if you're like me, you know April 15th is that deadline date, right? And so I don't want you to come up short. I've asked Mr. Milam to talk to me about some topics that I've had some concerns about and I've had questions about. So I just wanted to make sure that I'm answering your questions as well. So thank you for giving me this opportunity.
No problem. Thank you.
Okay. And so if you didn't know, he also has an office here in Warren County, but he's also located in other areas throughout the state too.
Yes, ma'am.
Okay, so you're located in
So the Greensboro office, High Point, North Carolina, Warren County, of course, and Concord, North Carolina.
in Concord. Okay. So if you miss him here in Warren County, you're traveling, you have some of those other questions or family in those other areas, please refer them to him. Make sure that you make those connections because I don't want you to come up short at tax time. Okay. So listen.
Yes, ma'am.
I like just asking questions that people want to ask and just don't know how to get the answers to. Okay, so I had to write them down. All right. Now you are preparing taxes, and the best solution, in my opinion, is don't wait the tax time to get ready. Be ready all year, right?
Yeah. You always want to have a continuous process. You want to. What I suggest to people is shoebox. Shoebox accounting is not gone away.
Okay.
Put all your receipts in the shoebox. If you're a business owner, you want to maintain your stuff separately. So I always like separate bank accounts. Have a account for your business, have an account for your personal. Otherwise, the IRS considers that commingling of funds.
Okay.
So what I tell my clients, ask yourself, am I doing this for business? If you're doing it for business, then you want to throw it in that box.
Okay.
So you'll have your receipts.
Okay.
Although you can use your debit card, you can use your cash apps, the burden of proof always goes back to that receipt.
To the receipt.
So the IRS could go back and say, okay, well, Miss Sharonda, I know that you cash app someone $500, but what did you cash app them for?
Oh.
So that receipt is always going to be your ultimate burden of proof.
Okay. So shoebox taxing. Okay, so I like that because that shoebox, we all got an extra shoebox somewhere. Throw those receipts in there. So if I'm going out for a luncheon with a client, I can save that receipt.
Save that receipt, put it in your shoebox.
Put it in the shoebox. Okay.
You can have your debit card that's going to support the transaction. Then you're going to have your shoebox that actually has the receipt.
All right. Good deal. Good deal. Okay. So we want to start preparing all year. So we don't want to wait till March to get ready for April 15th.
No.
Okay.
No. And I want to also, it's two deadlines. When you're a corporation, the deadline is March 15th, not April 15th.
Oh.
When you're an individual, the deadline is April 15th.
Okay.
So each year I have a number of clients that they'll miss it by that 1 month and then they're charging $195 per member per month.
Okay.
So you'll get a late fee just by filing 1 month late.
Okay.
An extension is 6 months from the date of original filing. So a business return is due September 15th. Individual return, once you extend it, is due October 15th. So it's important that you extend it correctly.
Okay. It's important that you extend it correctly. But I'm also concerned about those people who wait till the last minute and say, you know what, it's right here about to be April 14th and I need an extension on my individual taxes. Is there a cutoff for an extension? You
can file an extension to the last minute, 12th hour.
Okay.
So we do a lot of extensions at 11:59 on April 15th.
Okay. And it's best to do this extension so you won't get the penalty, correct?
Right. Well, no. An extension is an extension of time to pay. Time to file. The amount due, if you have any monies due, that's still due on the original due date.
Oh.
So if you owe the IRS, the deadline is still April 15th. They're only giving you an extension to file the return. So if you're anticipating the liability, I always suggest to a client, okay, well, I guess I owe X dollars. Make sure that you go ahead and send that in good faith.
Okay.
To avoid underpayment penalties and other things of that nature.
Good stuff. Good stuff. So let me ask you a question as it relates to dependents. So sometimes in the community we hear, hey, I'm going to file, my niece on my tax. Is that legal?
They have several tests. You have an age test, less than 23. You have a support test, which is, did you provide more than 50%? You have a relationship test, and then you also have a test, did that child reside in your household?
Okay.
If you fail any of those four, then technically you shouldn't do it.
Okay.
That is very common. I'll have clients come in and, hey, can I claim my niece? I provided support. I sent money here. The IRS goes back and say, did that child reside in your household? Did you
Okay.
provide more than 50% of the support? There's always a risk if you don't adhere to one of those 4 tests
Okay.
that it could come back on you.
Okay.
If it comes back on you, then you're going to be responsible to pay that money back.
Pay it back.
And they also could do what they call a disallowance. So they'll punish you for the next 5 to 10 years. So
Okay.
you have to be very careful about that.
You have to be very careful about that. Okay. So what about when there's a parent that wants to file the child and the other parent has already filed the child? How does that work?
I like that. The person that adheres to the 4 standards, whether they're first, whether they're last, it's the person that adheres to the 4 standards.
Okay.
I.e., so person A files that child and they were not entitled to file that child, and they file electronically and it gets rejected. Person B can still file that child. They can have to mail it in. Usually I'd advise them to send in your documentation, school records, medical records, church records to support, hey, this is my child. I can provide support. Birth certificates, they always like birth certificates to say, hey, this is truly my child, to support their relationship. So what the IRS will ultimately do, they'll go with who they feel is the most appropriate person to claim.
Okay.
They will not tell you who the other person was that claimed.
Okay.
So sometimes I'll have people being vindictive. Oh, I'm gonna get my baby daddy in trouble. I'm gonna go back and get this girl. No, doesn't work like that.
Doesn't work that
way. It may or may not happen. So
Okay.
if you truly feel that you're entitled to claim your child, then still send those documents in.
Okay. Okay. So when there are situations where my mother's lived with me and she's not going to file her income taxes, can I file her on my taxes?
Well, your mom lived with you. Once again, we go back to those four things.
Okay.
So with a parent, that's very common. But one thing I'll also tell you, make sure that your parent doesn't have any type of pension.
Okay.
If they're just receiving Social Security or some type of disability, once again, you're providing more than 50% of support, you're okay.
Right.
However, if your parent has a pension, sometimes you could be putting them at risk of having a liability. For the sake of you getting $500 more, you're putting them at risk of losing $500.
Losing money.
So you want to be careful when you're claiming a parent.
Okay. Okay. Good stuff. I'm learning here. So now I always have to ask this question because this has come up even for me. Pet lovers. Now I love my pet, and I tell you those bills add up. Can you actually file your pet?
No.
You can't.
No, you have to have Social Security number. So if you got a dog with a social, then by all means we'll claim it, and you can come here to Solutions. But if you don't have that social, then you can't.
Okay. But you would be surprised how many people say, "I'm gonna claim my dog." I'm gonna, all these.
And I'm gonna twist this to a unique scenario.
Okay.
There are some people that, for mental reasons, grief, or whatever the case may be, a doctor may prescribe, say, hey, let's get this dog and it's going to help you with therapy.
Okay.
You can write off that animal. Okay. However, it does have limitations, but it has to be one that's medically prescribed. I've seen doctors prescribe certain medications, certain therapies, certain gym memberships, things of that nature. So an animal very well could fit that bill, but it does have a lot of limitations. Usually it's limited to 10% of AGI. So given an example of someone that makes $100,000, that means you got to have a $10,000 dog.
Okay. I don't have a $10,000 dog.
So it does have some limitations, but I do want to say I have seen scenarios in which, a lady was grieving. I had a client that was grieving, and the doctor said, "Hey, I need you to get an animal or something."
Okay. Well, that's good information. So, if I'm starting a new job, and let's say I know that I do not have any dependents, and I want to carry 10 dependents on my taxes because I want all my money right now. How does that work at the end of the year?
I always suggest that people under allow. So if it's just you, I like single and zero.
Okay.
That way, because people want refunds, but refunds aren't necessarily good because in essence, a refund, you've loaned the government your money, interest free. So if you're one of those disciplined people that you can invest your money, be it whatever currency, whatever stock, whatever business opportunity, then do it. Okay. However, a lot of us are not that disciplined. Correct. So personally, I do a single zero, and then I like to get a little bit of a refund at the end of the year.
End of the year. So that way you paid it up front and not owe it later.
Correct.
Okay, good stuff. Good stuff. So all of you no dependent people or people who want to get it all during the year, remember, do that zero so you can get that refund. I'd rather pay more on the front end and get a little bit more on the end.
It's hard to come up with that money.
It's hard to come up with that money. It's, and that's one of the things, we have to prepare for. So you need to have a plan if you have to pay those taxes. So you need to pay them. Because if not, Uncle Sam will come get it.
Correct.
Okay. So if you're retired, and I heard you say with pension with parents and so forth, so that's the same That's the same answer, I would imagine. So if you're retired and you don't want to mess the pension up.
Yeah, it's easier to have the company withhold the money.
Okay.
However, I have a lot of retired clients that I'll suggest or we'll calculate estimated payments. We'll do 4 coupons.
Okay.
And we do that as a courtesy, for our Warren County clients or any of our offices, even if they're not our client.
Okay.
We have an elderly population that say, hey, I don't want to get in trouble. I don't want to pay the IRS too much. Come by, we'll run some coupons and we'll calculate some stuff for you. But you always want to be proactive. What you're trying to do is avoid an underpayment penalty.
Correct.
Because IRS will penalize you for not paying enough. So you may not want to base your estimated taxes on getting a refund, but you really just want to avoid a penalty for them saying, hey, you didn't pay us enough, give us some more money.
Right.
So that's really what you're trying to avoid.
Okay. So avoid the penalty and avoid having to pay that overpayment.
Right.
Okay.
Underpayment.
I apologize. Underpayment. Okay. So let me go back to this. So let's say the two parents who share custody of a child, they every other week, and this child's with this mom, and dad equally amount of year. Can the dad file 6 months and the mom file 6 months?
In theory, no.
Okay.
I think they ultimately should have an agreement. What I like alternating years. I have a lot of clients that alternate years. I have clients that come up with agreements. The IRS does not necessarily frown upon an agreement. A lot of court-ordered agreements. Sometimes an agreement consists of an offer and an acceptance. Hey, you claim 1 year, I claim the next year. We both sign, we agree, we date. That's an agreement. So the court does acknowledge agreement. So I think coming up with an agreement that's in the best interest of your child. That's not your money. That's not for your new car. That's not for your new house. That's for your family. That's for your child. So do what's in the best interest of your child.
So does the earned income credit fluctuate per child or the number of children?
It's up to a certain amount, and that's a very good question because you'll see signs, some tax preparation organizations up to $4,000 per child, up to $3,000 per child. That's a question that I'll never answer on the telephone.
Okay.
How much they giving per kid? I never answer that question because it depends. They're not going to give as much to someone making $37,000 versus someone that's making $16,000.
Okay.
The earned income credit, just the whole concept of an earned income credit is the government's way of stabilizing income for Sharonda's a single parent that has a lower income.
Right.
Monica's a single parent that has a higher income. So the government's trying to equalize it because they want Sharonda and Monica's kids to have the same way of living. So I think one of the greatest accomplishments that I've seen, especially in the Warrenton area, is I'm working with clients and young people that they're going to school and they can't get an earned income credit anymore.
That's right.
Because they're making too much money.
While
they're saying, oh man, Damon, that's bad. I think that's one of the greatest accomplishments because you've worked your way to that point. So that's very good.
And that's good. That's a good point to make because a lot of times we do hear at this time of the year, especially, I got to get my refund. I got to get my earned income credit. This is money that's owed because I have these children. But on the other hand, if I'm hearing that if you're working and you're out here, you've graduated from college and you're working in your field, and even if you didn't go to college, you're working your job and you're making the money. It's always a good thing to be in the next tax bracket. It's a good thing to be, elevate yourself and to make sure that you're making the money that can take care of you and your family. Don't worry about that earned income credit as the crutch or as a cushion, but earn it on your own. So I like that. What qualifies a taxable write-off? I've had some questions about, well, what can I write off?
Well, that's an interesting question. Post 2018, a lot of things that we were able to write off as a W-2 employee has gone away. That was on a Form 2106, which was part of your Schedule A. That's no longer there.
Okay.
So what I would suggest, I love clients. I love encouraging entrepreneurship. So I advise any of my clients, be it Uber, be it Lyft, be it selling cookies. I want all of my clients. I love to see entrepreneurship because that opens up another avenue in which we're able to write off some things legally.
Okay.
But once again, ask yourself, am I doing this for some form of business? Go back to our shoebox.
Okay.
If I'm not doing it for the business, then it's personal.
Okay.
But I challenge anyone, all of your followership, the people that you're working with, and I know you work with a lot of different people, entrepreneurs alike. I challenge each one of them. If they don't have a business, start one.
Right.
If they do have one, you want to keep up with it.
Okay.
Because ultimately, if you're reporting an income and you're not correctly writing off your items, be it your mileage, be it your food. Once again, that question, am I doing this for business? If you're answering that question, yes, then you can write it off. Good. So I would just plant that question in the back of my mind. Am I doing this for business? So if you're hanging out, am I sitting down because I'm truly eating and I'm enjoying this pizza? or am I at Pizza Hut because I'm doing a business? So
Right,
ask
right.
yourself that question. I ask myself that often, very
Okay,
often.
good stuff. Good stuff. And so, as we're talking about the preparation for the tax season and getting that shoebox and keeping things in order, how long should you keep your previous tax return paperwork?
I like 7 years.
Okay,
Our office retention is 7 to 10. So we keep stuff. And I've seen, especially with the state of North Carolina, I've seen North Carolina go back 10 years.
okay,
So keep your stuff 7 to 10 years. Electronic is cheap to snap with your iPhone now. Snap
right,
a receipt, snap your receipts.
okay,
I always tell my clients, get an electronic copy of your tax return. You're going to lose that paper copy. So
right,
get an electronic copy of your tax return. Keep your file,
right.
be it the Google Docs or whatever cloud environment you have. Keep it as long as you can.
Keep it
It's not like we have the old boxes of yesterday that's in the corner.
right,
So
right.
scan it and keep it electronically,
Keep
but keep
it.
it as long as you can.
Okay, good
Hmm.
stuff. Good stuff. And let's say if you have a loved one that had passed, should you file if you're the next of kin, should you file that person's taxes?
Well, in the year of their passing, they still have to file their own return.
Okay.
That kind of hits home. My mom passed away on January 1st of 2009, so we still had to file her return. She's married at the time, so she still had to file a married filing joint return.
Okay.
So in the subsequent years, you are responsible because you may get some pensions, you may get some money that lingers over insurances and things of that
Mm-hmm.
nature. I want to answer a question that you didn't ask. In an example in which you have a household in which they're married, they maintain a household for a child. That year that the person passes, yes, you'll still file married filing joint. Because there's a dependent present on the return,
Okay.
that person will be a qualifying widower for 2 subsequent years. So
Oh.
they're not going back from a married filing joint automatically to a head of household or automatically to a single.
Okay.
Because they maintain the household for a qualifying dependent, they have something called qualifying widower
Okay.
that will allow them to get the exemption. That's the government's way of saying, hey, we realize that you've lost a key member of your household and we're still going to give you the exemption
Okay.
to help you out. So
Okay.
that's a very good question.
Okay. Okay. And what about college students? So if your child goes off to college, is that child still your dependent?
That child is going to be your dependent up to 23.
Okay.
And 17, that
Okay.
last year of high school, which is the most expensive, you're buying class rings and everything
Yes.
else, the government takes away $1,000. You're losing the child tax credit. That's that transition of boys to men. However, once you turn 18, you're going to pick up the America's Opportunity Credit. That's a credit
Okay.
for post-secondary education. It's a very high credit. It can be
Okay.
used 4 consecutive years. After that, we can also use a lifetime learning credit. So there are educational credits that are available to a college student that can be
Okay.
taken by the parent,
Okay.
not the student,
Not the student.
because the
Okay.
student's too young. So I always want to bring that to a point because a lot of times I'll have a young college student say, well, I don't want my mama claiming me no more. Well, your mama's entitled to credits that you're not
Okay.
eligible to qualify. So you
Right.
do want to continue to claim your child
Okay.
because once again, you're providing more than 50% of the support.
You are.
Yeah, so good question.
Okay. And then I just want to, I know you mentioned like the Uber and drivers and the Lyft drivers and entrepreneurs, and that is the 1099 form they have to complete,
Mhm.
right? So if you are independent contractor and you're trying to maintain your taxes, and then you have a job, what recommendations would you have for those entrepreneurs that need to save up for those taxes? Is there like a strategy for that?
There's two ways. Either A, you can do estimated taxes,
Okay.
or B, you can establish a relationship with a payroll company. Of course, we do payroll, or you can do a QuickBooks payroll,
Okay.
or Gusto payroll. There's several SurePay. There's several online payroll portals
Okay.
in which you take your 1099 money.
Mhm.
It goes to your business account, and then you cut yourself a payroll check.
Oh, okay.
That way, you're truly getting a W-2 from your own company.
Okay.
There's also some tax strategy there in which we can make an election to treat you as an S corp. So you're going to effectively reduce your tax rate from 28% down to 12%.
Okay.
So that's a loaded question. It just
Okay.
depends.
It depends.
I also want to bring to a point that when you're an entrepreneur, one of your objectives, of course, is to get a tax return or minimize your tax liability.
Mhm.
However, it's also important to maintain your income
Right.
because a lot of times people will cut their income. They can't buy a house. They can't buy a car. 1099, I love that flexibility because you're making your money and you get to spend it how you want to.
Correct.
However, sometimes you spend too much of
Too
it, then
much
you
of
can't
it.
substantiate it.
Mm.
So it's time to buy a house. It's time to buy a car. It's time to buy
Right.
your girlfriend that ring. You can't buy it.
Okay.
Yeah,
Okay.
so you want to keep your income kind of high.
So let's say the employee who did not get a W-2 from the employer. What course of actions do they have? That they're no longer with the company and they need a W-2. Is there like a database somewhere where you can get it?
The IRS will give it to you.
Okay.
1-800-829-1040. You can get it. You can also go online and request a transcript.
Okay.
So usually those transcripts are not available in January.
Okay.
They'll probably be available post January 31st. So mid-February, March, they'll become available.
Okay. And then one of my last questions is that, because this is one of the topics that someone brought it to me. You filed your taxes and you get a letter about something that happened 2 years ago, 3 years ago, and they did an audit, and now you have to pay some money. Can you dispute that?
You can always challenge an audit.
Okay.
And audits are not bad. A lot of times people will say, "Oh, my accountant messed me up," or "I messed myself up." An audit really isn't bad. Audits usually are generated by a computer.
Okay.
So they're random. They truly are random.
Okay.
Some years they may be looking at people with rental property. Some years they may be looking at people with child tax credits, or sometimes they'll even look at two people that claim the same child.
Okay.
That's a high area for audit. However, if you get an audit, the best thing to do is go back to your shoebox. Remember at the beginning, we started off with the shoebox. I want you to go back to your shoebox, pull your bank records, and come up with your substantiation. Don't avoid the call. Not calling the auditor back, not responding is not going to make it go away.
It's not.
Respond to it. Reach out to your tax preparer, reach out to your accountant, whoever helped you develop it.
Okay.
And collectively, y'all support it. One thing I also want to bring it to an attention. At the bottom of every tax return, you're saying under the penalties of perjury, you declare that you are giving the correct information to that tax preparer. It's not the tax preparer's fault. It's yours. Okay. So the burden of proof is on you being the taxpayer, you being the client.
Okay.
So it's important that regardless of who completes your tax return, look at that tax return, understand what they're doing.
Okay.
I've seen scenarios, and I'm going to laugh at this because I had a client here that I work with them in Warrenton. Geothermal energy. That's something that they drill to the core of the earth, and that's very popular out west. Okay. No one in Warren County has drilled to the center of their earth in their backyard to get no heat.
No.
However, I've seen people with that on their tax return because it's a substantial credit.
Okay.
They were audited. You can't prove geothermal energy that you drilled to the core of the earth.
Okay.
So when I was working with that particular client, I said, well, you're aware of that? And they said, no, I just know I got a large refund. So if it's too good to be true, you probably want to question it.
Right.
So it's your responsibility to challenge even the person that's completing it.
Okay.
Hey, how did I get a large refund? When I was on TurboTax keying it myself, I got $3,000. Now you got me $23,000.
Okay.
Challenge that.
Right.
Because once again, the burden of proof falls on you.
Okay.
And if the IRS can ever come to a position and they can say that you're malicious or you had a criminal intent, you could go to jail for that.
Oh,
so I want you to be very, very careful when you're having someone prepare your taxes, or even if you're preparing your own taxes, you want to be careful with certain exemptions.
Okay.
Another question that I'm going to answer that you haven't asked: in choosing a tax preparer, there are a lot of people that complete tax returns.
Okay.
There are a lot of people, and they're good. Some of them may be good. Some of them can be terrible.
Okay.
When you're choosing a tax preparer, I also suggest that it's good to find someone that's going to give you their whole name. If they're not giving you their phone number, they're not giving you an address of where they live. And it's a blessing to have offices, but that doesn't mean, go to Damon because he has an office.
Correct.
Damon started off in the corner of an apartment too.
Okay.
So I wanted you to come to me when I was in the corner of that apartment. Right. So there are some excellent people that are in the corner of that apartment, but let's challenge them. Do they know what they're talking about when they're in the corner of that apartment?
That's right.
Are they going to give you their telephone number? Are they going to give you an email address? And are they accessible?
Okay.
If I ever have someone that says, call me, and they have a Google Docs number or something like a Google line, and I can't get them back, or if they have their nickname as their Facebook profile, you probably want to shy away from that person.
Right.
Because what happens in the event that you do have a problem?
Correct. Okay.
We can't find nickname.
Right.
We can't find that Google tick number. There you go. So you got to be careful with those type of things.
Big ticket doing taxes ain't the one. Let's stay away from that person. Let's stay away.
Right.
So when you're married and you're saying, hey, I'm gonna be married, filing single, or separated, or however it's worded, but you're in the same household, is that an option?
No. Okay.
Okay.
When you're married, your options of filing are married filing separate, married filing joint.
Okay.
Those are your only two options.
Okay. You can't be married, filing head of household?
No.
Okay.
Head of household means an unmarried person maintaining a household for a qualifying child.
Okay.
That's a very popular filing status
Okay.
because it opens the door to earn income credits. It opens the door to rental property losses. It opens the door to several credits.
Okay.
So the two of us, we're married. Oh, you're head of household, I'm head of household. That's not a legal filing status. That's
Okay.
actually, the government deems that as fraud.
Okay.
So you got to be real careful about
Big
that.
Tigger doing taxes might not want to do that. Okay.
Right. And that's common.
That's
I've
common.
heard people. So head of household does not mean that you own your own house. You got your own car. Head of household means an unmarried person maintaining the household for a qualifying dependent.
Okay. Okay. And so when you are what is it? Married but filing, is it filing separate?
Married filing separate is not an
Okay.
ideal filing status.
Okay.
And people used to do that. That in the olden days they would do that because they marry someone and that person owes the IRS.
Okay.
So they would say, hey, I'm going to protect myself from that other person. There are other ways of doing that. There's
Okay.
an injured spouse form. It's an 8379 that you can say, hey, I'm married to him. I love him, but don't take my refund.
That's
There
right.
are ways of filing that.
Okay.
So once again, going to a reputable accountant or a tax service, they're going to understand that and they're going to help you file the best way.
Okay, okay. Now, I know there's probably a lot more scenarios out there, a lot more questions that I probably did not ask. Is there anything you want to share with the followers so that they would know, something I didn't ask? I know you chimed in on some, but is there any other topics that we need to hit on?
Yeah. I think you did an excellent job. Great questions.
Okay.
And I appreciate the interview because we were able to ask some questions and answer the uneasy questions,
Right.
the type of stuff that
Right.
we typically don't hear. We want to know the answer to it, but we're scared to ask.
We are definitely scared.
Great, thank you.
Thank you for allowing me to do this interview. So, and that's what we do here at Riddick Events. We always want to have a conversation. So, in having a conversation, we want to make sure that you are getting your questions answered. So, if you have a topic you want me to cover, send me that topic. Keep in mind that I'm here to be on that couch with you. It doesn't matter the color of the couch, but we will be on that red couch soon. And I want you to do as always. Come talk to me before you talk yourself out of your next event. Have a good evening.